What's up, my Mind Your Money business folks? It's me yet again with another video on today's stock market news. And as always, hopefully you are in the market and not trying to time the market because that is simply impossible to do. So hopefully you guys had a blessed, active, and good weekend. So let's see what happened today in the market. It says the S&P 500 NASDAQ climb as Dow wavers with government shutdown in focus. So it says here, U.S. stocks mostly climbed on Monday as investors eyed a looming U.S. government shutdown, that affects me, that risks delaying the release of the all-important monthly jobs report later this week. The S&P 500 gained 0.2%, while the tech-heavy NASDAQ rose 0.5%, with the two gauges poised to build on Friday's rebound, but giving up bigger gains earlier in the session. Meanwhile, the Dow Jones Industrial Average was flat. It was flat, people. Flatter than two pancakes. So markets are assessing the odds of a U.S. government shutdown on Wednesday this week as a standoff between a standoff. So there's a standoff between Republicans and Democrats, right? A meeting between President Trump and congressional leaders is set for Monday, likely the last hope of avoiding a halt to the federal funding or to federal funding. Odds of a shutdown are over 80% according to Polymarket. Okay. So the Department of Labor on Monday said that the Bureau of Labor Statistics, which releases key economic data, including Friday's planned monthly jobs report, will suspend all operations. Economic data that are scheduled to be released during the lapse will not be released, the department said, as part of a shutdown contingency plan. So the Bureau of Labor Statistics monthly jobs updates, as well as its release of consumer and producer inflation reports, have been key to the Federal Reserve's policy setting and the bets on interest rate cuts that have helped buoy stocks. Last week, jobless claims fell short and GDP growth was revised higher, fueling speculation that the Fed may not cut rates as aggressively as hoped. Right? Because we all know when rates are low, people spend more money. You know, they buy more houses, they take out more loans, they finance more cars. You know, businesses are able to borrow money at a cheaper rate, right? But it says, either way, that puts even more weight on jobs reports amid forecasts that non-farm payrolls grew 43,000 and the unemployment rate stayed at 4.3% for the month. So at the same time, investors are regrouping after a losing week that saw cracks emerge in AI-focused stock trading, as well as surprise tariff announcement from President Trump on October 1. On Monday, Trump added that those tariffs announcements by proposing new duties on movies and furniture. Despite that, stocks are still on pace to finish September and the third quarter with gains. Oh, yeah, that is true. So the S&P 500 is up 2.8% month to date, while the Dow has added 1.5%, and the NASDAQ boosted by tech, has rallied 2%. So the market closed a few minutes ago, so let's see what happened. SPLG, the S&P 500, gained 21 cents today, closing out at $78.06. Palantir gained $1.29 today, closing out at $178.86. Broadcom lost $6.63 today, closing out at $329.90. Okay. Tesla gained $2.81 today, closing out at $443.21. Nvidia gained $3.69 today, closing out at $181.88. FTEC, Information Technology ETF, Exchange Traded Fund, gained $1.15 today, closing out at $221.10. Apple lost $1.03 today, closing out at $254.43. Meta lost 35 cents today, closing out at $743.40. And that's it, people. That's it for the market. That's it for what happened today in the market. And I'm hoping that you're in the market. You're not straddling the fence. You're not thinking about it. It's not that hard. It's not as complicated as I once thought it was, which kept me from investing in individual stocks and paper assets for a very, very long time. But hey, I started, and that's the key thing. As long as you start, you have to start at some point. But before you can start, you need to get out of debt. If debt is a major problem and complication in your life, you need to get rid of it. Just like that anything that you don't like and you choose to get rid of it, whether it be a person, place, or thing, you need to do the same thing with debt. You need to do it with a plan. And the plan that you can do away with debt with is called a budget. And you utilize the budget by telling your money where to go each month. So you can stop trying to figure out where it all went. You ever have those days where you're trying to figure out what happened to my money? How come there's nothing in my account? Why am I always broke? Because you're not on a budget. Maybe it's because you're not earning enough money. Maybe it's because you're living above your means. Maybe it's because you're paying too much to social media, other people, places, and things, and you're trying to live up to some fictitious way of life. It's not real. You know, these things you see on the internet, you can't believe everything that you see, right? So one key thing that that I live by is living below my means. I have nothing to prove to anyone. I don't need the newest car. I still like my 2012 car that runs perfectly. I don't need to buy designer clothes. I like wearing clothes that I've had for years. As long as you take care of it, just like your car, as long as you take care of it, you can keep driving it. You can keep wearing those clothes. Now, there are some things that I do splurge on, maybe once or twice a year, like when I fly, that's it. But yeah, but for the most part, I live below my means so that I can do the things that I want to do that may require a little bit more money, right? But again, that's planned. It's called a budget, right? So that's what I advise you guys do. You need to create a budget and start telling your money where to go. I follow the Dave Ramsey plan where you stop all investments. You put away $1,000 in an emergency fund. Any money that you do have, left in the bank, you start throwing that at your debt. You list your debt from smallest to largest, regardless of interest rates on those things, smallest to largest, because as you pay off smaller things, you start to get more excited, and then you just continue that snowball into the bigger debt and the bigger debt. So you pay off all your debt. And then once you pay off all your debt, also when you put away that $1,000 emergency fund, you stop all investments, you pay off your debt. Once that debt is paid off, it could be a couple of years, right? Then you can start investing back into your retirement plan, 15%. Now you can build your emergency fund up to 3 to 6 months. Now you can invest into your kids' college fund so you can keep them from going into $1 trillion of debt along with so many other Americans right now. Combined, student loan debt is like in the trillions of dollars these kids are getting themselves into. They're getting into $60, $80, $100,000 of debt, right? To go to these private schools, to go to these big schools, right? Only to get out of college at the age of 20, 21, 22, 23 to be paid $40,000, $30,000, or not even work in the field that they got a job, or received their degree in. You understand what I'm saying, right? Either way, you have to be smarter. So pay off your kids' 529 college fund. Then if you have a mortgage, now you can start paying off your mortgage. Your mortgage should be the last thing that you pay off. You clear out your debt. Now you can start tackling your mortgage. If you don't have a mortgage and you're renting, there's nothing wrong with that. But if you would like to own a home, now you can stack away 20% outside of your emergency fund, place down on that home, and finance it for 15 years. And because you've been so aggressive in paying off debt, you more than likely will pay off that home in 5 to 7 years. You can live a little. You know, you don't have to be as strict and start throwing all your cash towards your mortgage. Have fun, enjoy yourself, go on trips, go on vacation. Treat yourself, relax. It's like that's something that I have to tell myself sometimes. Relax, do something. Anyways, so pay off the mortgage, and after you pay off your home, you can do whatever you want to do. You may retire a spouse early. You may retire early. You may save up to buy another piece of property, investment property. Give away more money, give away some money. You have options. There's nothing better than having options. But also, along with health, along with wealth and building of it, stay on top of your health. You know, because health is wealth too. You know, it would suck to be debt free and have access to all of this cash and possibilities, but your health sucks. So stay on top of your health, people. All right, so I'm going to end this video here. So like, comment, subscribe, share this video. Let me know what you think, if you think anything at all. And also, any and all information on my channel is for informational and entertainment purposes only. So please consult with a financial advisor before you invest any of your hard-earned money. All right, so you guys take care. Have a blessed day. Peace.